Welcome back to The Explainer. Today we are diving right into the absolute lifeblood of agricultural and fishery cooperatives, and that is the operations phase. You know, if you've ever wondered how these community powerhouses transition from just pooling their initial capital to actually driving real day-to-day economic growth for their members, well, you are in the exact right place. We're going to pop the hood, look at the real mechanics of how they operate, and crucially, how they track every single peso. Here is our theory to practice roadmap for today. We'll hit 1, the operations phase, 2, revenue recognition rules, 3, types of farm inputs, and wrap up with 4, practical accounting scenarios. Let's get into it.
Section 1, the operations phase, the core economic engine.
So this phase covers the cooperative's core economic activities. It's that exciting moment when the startup phase ends, the co-op rolls up its sleeves and really starts fulfilling its ultimate purpose. We're talking production support, input supply, financing, and marketing of agricultural produce. It's no longer just money sitting in a bank account somewhere, right? It's about putting that money to work, out in the dirt and on the water. And these daily operations are incredibly expansive. A cooperative isn't just a basic storefront. It procures vital farm inputs, provides heavy-duty services like mechanization or drying facilities, and even aggregates members' produce to negotiate better market prices. But what's really fascinating here is the financing. Alongside standard receivables, you have these highly tailored, unique structures, like Mora Baja, which is essentially a cost-plus sale, and Salam, which is an advanced purchase of crops. It just shows how cooperative support is dynamically built for the actual, on-the-ground realities of farming. Naturally, all this non-stop activity generates a ton of income and expenses, leading to a net surplus. But here's the kicker. The reason why this matters so much for cooperatives, that surplus, it doesn't just sit locked away in some corporate vault. It gets systematically pushed right back to the farmers and fishers who generated it, through patronage refunds and interest on share capital. Literally, the more a member uses the co-op, the more they benefit from its success. It's a beautiful cycle.
Section 2, revenue recognition rules. The golden rule.
Okay, before we even think about touching a ledger, we absolutely have to set the ground rules. And the crucial point here is the golden rule of the accrual basis of accounting. Income is recognized when earned, not when cash is received. Listen, if there is literally one thing you take away from this explainer today, make it this. Accounting for a thriving co-op isn't just counting cash in a lockbox at the end of the day. It's about capturing the economic reality the exact second it happens. So, what does earned actually look like in the real world? Well, under the accrual basis, if you're selling farm inputs to a member, boom, the income is legally recognized the moment those goods are delivered. If it's a sale of produce, it's recognized upon the transfer of ownership. And for services, say milling rice or renting out a tractor, you recognize that income exactly when the service is physically rendered. You do not wait around for the farmer to pay you next month to record the value you created today. Section 3, types of farm inputs, the tangible goods. Let's bridge the gap between abstract accounting rules and the actual physical items changing hands. Starting right at step 1, seeds and planting materials. These are critically utilized right at the kickoff of the production cycle. Whether we're talking certified rice seeds, high-yield hybrid seeds, vegetable seedlings, or even cuttings and tubers, these are the very first tangible investments a farmer makes through their co-op. Moving right along to fertilizers, because, you can't just drop a seed in the ground and cross your fingers. You've got to feed the soil. Cooperatives supply a massive range here. You've got your organic options like compost and vermicast, your heavy-hitting inorganics like urea, and even foliar fertilizers that go straight onto the plant's leaves to maximize that yield. Next up, crop protection. Think of this as basically health insurance for the harvest. We're talking pesticides and insecticides to fight off bugs, herbicides for weed control, and fungicides to stop devastating diseases in their tracks. It's an absolute shield to make sure months of hard work don't just vanish overnight. And hey, we definitely can't forget the fishery side of agri-fishery coops. It's a totally different environment requiring highly specific gear. We're looking at fish feeds, fingerlings like young tilapia or bongus, heavy nets, essential post-harvest supplies like ice to keep the catch fresh, and, of course, boat fuel. The environment changes, but the cooperative's role as the vital, reliable supplier, that stays exactly the same. All right, Section 4, practical accounting scenarios. It's time to follow the money. Okay, let's bring all this operational theory right to the accountant's desk. Picture this. A farmer member walks into the Coop, grabs fertilizer worth 5,000 pesos, and pays cash on the spot. The original cost of that fertilizer to the cooperative was 3,500 pesos. So, how do we formally handle this? It's a two-step dance. Step 1, we log the 5,000 peso sale. We debit cash to bump up our assets by 5,000 and credit sales to recognize our 5,000 in revenue. But wait, we're not quite done. Step 2, we instantly recognize the cost. We debit cost of sales for 3,500 pesos and credit our farm inputs inventory for 3,500 pesos. This accurately proves that those physical bags of fertilizer have officially left our warehouse. Now let's twist it. What if it's a credit sale? This is incredibly common in farming. Say a member needs seeds worth 8,000 pesos for the planting season, but they are buying on credit. The cost to the cooperative to acquire those seeds was 6,000 pesos. Remember that golden rule of accrual we talked about? Here it is in action. We recognize the income because it is legally earned the moment we deliver the seeds, even though we haven't seen a single peso of cash yet. So for step 1, instead of cash, we debit accounts receivable members for 8,000 pesos and credit sales for 8,000. We earned it, we record it. Step 2 stays perfectly consistent. Debit cost of sales for 6,000, credit inventory for 6,000. The financial books seamlessly mirror the physical reality on the farm. Okay, let's go big, a bulk sale. The cooperative supplies 25,000 pesos worth of mixed fertilizers and pesticides to a whole farmer cluster. The catch? It's strictly payable only after the harvest comes in, which is months from now. The underlying cost to the co-op is 18,000 pesos. The beautiful thing here? The dual entry logic doesn't change just because the numbers got bigger. On top, we record that massive 25,000 sale right into accounts receivable. On the bottom, the 18,000 cost recognition out of inventory. It is such a clean, precise, and entirely scalable system. It's exactly how Co-op keeps its financial health completely transparent. Looking at these two methods side by side really proves how powerful the accrual method actually is. Whether it's a cash sale where you immediately debit cash or a credit sale where you debit accounts receivable, the revenue is captured the exact moment the cooperative provides value. It perfectly handles the present and the future, which really caps off our theory to practice journey today.
So let me leave you with this provocative thought to wrap things up. Take a hard look at your own ledgers. If your cooperative's books only reflect a transaction when cash physically changes hands, what true value, what hidden obligations, and what crucial inventory movements are literally slipping through the cracks of your operations right now? Mastering the accrual basis isn't just about passing an audit, it's about seeing the true reality of your cooperative's impact. Keep learning, keep building those operations, and I will catch you on the next explainer.